Let's get across the market open. Jessica Amir from Moo is joining me now. Hey, Jess, nice to see you. So that was a pretty lackluster finish for U.S. markets. What stood out to you?
Well, I really do think that we've got a solid backdrop for potentially more records to break this week. But I think really the focus is on US-China trade talks, and that's probably going to squarely benefit not only the technology sector, specifically US chips, but also commodity stocks as well. And it's really interesting to see that now we've got more calls out there for the Aussie share market to rise 3.3%. Versus calls for the Nasdaq 100 to only nudge up 1%. And of course, this is factoring in the next major options expiry, which is on the 19th and 20th. So we've got about just over almost 2 weeks for these gains to be tested. So I think really favorably, everyone is looking to US-China trade talks. Those, I guess, have somewhat been far better than expected. And the US has said that they're looking to, pardon me, sorry. The US has said that they're looking to, I guess, obliterate some trade restrictions that they've got in place, while inversely, China is expected to drop their restrictions on rare earth exports. And we do have a trade representative, or if one of the US trade negotiators actually saying you should expect China volumes to flood the market in rare earths. So all in all, a pretty bullish scenario for commodities.
All right, so we're watching out for those records here in Australia this week. Now, also, we could potentially be seeing a boom in IPO activity. That would be exciting for local investors as well, Jess. Why is that?
Yeah, absolutely. I think so. Well, yeah, I think you hit the word on the head. Sonic boom, it could be, but we've had IPOs being quite lackluster for several years now, and we do have the Australian Securities Investments Commission kicking off a trial actually today, this Tuesday, and so this could really usher in a new IPO boom for Australia. Essentially, we've got ASIC looking to streamline the process, actually reduce the amount of time it takes to get an IPO off the ground. So currently, it's almost the entire year. So 20 weeks is how long it takes to get an IPO up and running. But at this stage, we do know that they're looking to drop that by a week. It doesn't seem like much, but ASIC is trialing that this week. So we'll learn a lot more. But I really do think the fact that we do have Virgin stepping back onto the ASX after being down and out for 5 years, this is really a great example of what we could expect in terms of encouraging retail investors back into the market. So it'll be really interesting to see after Virgin's IPO, after they hit the ASX, expected to be June 24, Nadine. Will they be stealing away market share from Qantas, from their very loyal, sticky customers? I don't know. But if we can just think about their ability to grow their earnings, I do think that they could potentially replicate some type of a earnings growth trajectory, and that might commensurate with strong share price growth. But let's see what happens after June 24.
All right, we'll be watching that with much interest. Back to today, though. So in your view, potentially we could see commodities doing well. I would imagine we saw oil up, we saw gold up. Just give us some sense of what we can be looking to today when the market gets underway.
It's a great question. So the Aussie share market, yeah, we do have eyes on 8,800 points. So we've got a lot of calls out there, or bets on, for the Aussie share market to lift 3.3% by next week. But sentiment in the commodities sector is going bananas. And you'd expect focus to be on platinum, palladium, also silver. All of these key commodities are hitting new highs. So, and the reason for that is because we are expecting to see semiconductor demand ramp up, as well as data center demand. And this, of course, puts commodities right in the centerfold, being key benefactors. So what can you play? Well, obviously the local respective commodity players in silver, palladium, would be or should be on your radar. But also down under, we've got the biggest listed semiconductor ETF locally, semi, that should be on your radar as well. That's expected to push up, particularly if we do see more favourable discussions with US and China. But the fact that we do have the US dollar down almost 10% from its highs is, again, another reason why you might expect a higher highs for some of these key commodity prices and, of course, commodity stocks as well. Also pleasing to see that bond yields are low, Nadine. That is, again, another factor playing into the new bull run-up that we are seeing in commodity prices here. And just rounding out the commodity discussion, interesting to see that China has continued to buy record amounts of gold for the 7th straight month. So this is supporting gold prices remain near record all-time high territory. They're still well off their highs that we saw some time ago, but they are holding up nicely.